So refresh us on your positioning on Teva, David, for those who don't know, who haven't been following as closely.
Yeah.
Are you still fully invested, or did you trim some?
No, so Teva is a big position, and I think I brought it up in the single digits originally here on Wall Street Beats, and the idea was no sector is worse hated than generics. Teva had a horrible balance sheet; they had taken out too much debt, and it looked like there was a chance it could go bankrupt. It was a small chance, but the stock was reflecting like it was a much bigger chance. And I said, well, if they could just do one or two things, they'll get out of the shadow of maybe going bankrupt. And I didn't think that that the world would let them go bankrupt. But sure enough, they've paid down debt. They've had some good news. They've reported almost clean quarters for 8 quarters in a row. I say almost. They gave guidance that was a little bit off one time, and they paid the price. The CEO, newish CEO, learned his lesson and even said it. He said, "Look, I made a mistake. I communicated too much bullishness. Shouldn't have done it." Um, so they've been able to meet and beat expectations for the last 2 years while paying down debt, and that's exactly what the stock needed. I like stories like that. And they have a couple pipeline drugs, one of which is a long-acting antipsychotic that should get approved really soon. And uh, that should be a big drug. It's a remake of an existing drug that's not once a month. This is once a month. And for an antipsychotic, that's really great for patients who have trouble sometimes staying on their medicine. They have another drug, which is the drug they just partnered with, which is an early stage biotech drug that's risky, but it's so far shown great data, and that's the kind of thing that uh, they only need a couple of those, and so people are pretty excited about that. I still like it. I'm considering selling some because it's done so well, and I think that if you look at the trading of it lately, some of it might be because people think that it's all based in Israel because they're an Israeli-based company. They're not. Like their production, some of the production is there, but I think Israel's shown a pretty good resolve to not let their factories get
Yeah.
bombed. That said, that is a geopolitical risk, and for maybe 10%, 20% of their production overall, I think that I really like it, but sometimes you just have to take profits. So I'll see after I meet with them. The CEO is going to be down at this Barclays conference, and I'll kind of get a sense of what else they have that they aren't, that people might be missing.
So if you didn't own it, would you buy? Would you buy it here? Would you be a buyer here?
No, I
You
want a
didn't already own this.
dislocation. No,
You want to
I
see
want a
it.
dislocation. Yeah, and I know that some people will say, well, if you're not buying, then you're selling. I don't. I mean, I don't buy that. I think sometimes you can just be like, no,
You can just
I
do
like this.
nothing. Yep.
Yeah, yeah.
Just put it on your radar and watch. All right,
It
guys.
could
You want to wrap it up there?
it could be a $40 stock. So it does have a lot of upside if they execute and these things go their way. I just want to get a better sense of what the gating for that execution is, and I'll get a better sense next week.
Okay. When's that conference?
It's Tuesday through Thursday, and
Okay.
a lot
So
of
maybe
lot
on
of
maybe on
it's actually
maybe on.
Jeffries. I want to say Canaccord, Jeffries, and Barclays all have their healthcare conferences down in Miami at the same time. It was originally just a Barclays venue during this time of year, and it was so successful that other firms have
Everybody
kind of
just piled
glommed
on.
on.
Yeah.
Yeah.
All right. Well, we'll look forward to an update on Teva next week, maybe, or the week following the conference. And
I
Bob
wouldn't.
will be.
If someone said they were going to sell part of their position here, I wouldn't argue it without not knowing anything more than I'm going to know next week. I wouldn't argue it because it's had such a great run. If you look just in November, it was $20. So 50% run since November, no reason to be greedy.
No, not at all. All right, boys, let's wrap it up. Thank you, Bob. Thank you, Mr. Maris.
All righty. See you
Catch you
guys.
back here tomorrow, everybody. Follow us on wallstreetbeats.com and have a great day.
Drive carefully, Bob.
I will. I'm almost
Yep.
there.
I'm in the parking lot.
Oh, good. He's there, safe.